Market psychology, we have optimism and herding, which are going to go hand in hand, and you're going to see why in a second. But first, herding is following what everyone else is doing rather than coming up with your own process and your own analysis. As you're going to see in the next couple of videos, the best analysis is your own analysis. So if you follow what everybody else is doing rather than using your own brain, your own thoughts to come up with your own analysis, you're basically setting yourself up for failure. If 90% of traders fail, they buy high, they sell low, they focus on the wrong things, they are not emotionally intact. If everybody is set up for failure, why are you going to follow with what everybody else does? That's hurting. It's basically like a chain reaction. If you're following other people and then other people follow you, it's like a domino effect and everybody's going to fail. And us as retail traders, we are set up to begin with, to fail. And herding is completely natural for the human mind. We compare and agree with others in the community. It's just a societal norm. We want to agree and side with other people's thoughts and suggestions rather than formulating our own. One, because it's easy, and two, because we have somewhat of an agreement and an acceptance between multiple parties that it's just not our own opinion, but it's someone else's, and we can kind of come to like a consensus with it. And it's a natural human tendency to be influenced by other societal influences that trigger the fear of being alone or the fear of missing out. If you see everybody, talking about a stock, a recent one is PLTR when this thing rallied, everybody, is talking about it, everybody's buying it. People that follow the herd are going to, hop in that trade as well because they fear being alone, they fear not being in it, and they fear, missing out on some of that action and having FOMO and not being able to, talk about it with others and not being able to have a piece of that action like everybody else's. So following the herd is a significant driver to market bubbles, rallies, and crashes. What I would recommend is to not follow the herd. Do not be a mindless sheep. Develop your own critical thinking. If you follow the sheep, you're eventually going to get run over by the herd. Herding leads to extreme optimism. Now, optimism can be used in two ways. You could look at it as pessimism, but we're just going to talk about optimism in the bull and the bear side in this case. But extreme optimism leads to bubbles or bubbles bursting. And we're going to call this by market reversals, and you're going to see a couple examples in a second. So if everybody is either really long, they're optimistic about increasing prices, or if everybody is really short, they're optimistic about decreasing prices and the market is going to continue to proceed going down, which we can consider pessimistic. But in this case, we're just going to call market coming down optimistic. This is going to lead to huge market bubbles and huge market bubbles bursting. So do not follow the crowd. Do not be a sheep. This is with anything in life. The masses are the asses. If you follow everybody else, you're going to be like everybody else. And if everybody else is mediocre, everybody else isn't seeing the success you want to see, do not follow them just because it's the easy thing to do. And do not follow them just because, you're taking the easy road out. In trading, the biggest profits are going to be profiting off of other people's emotions, especially fear and greed. If the market's coming down, you can profit off of people panicking and selling. If the market is rallying up and everybody is buying, you can profit off of their greed if that bubble, bursts. So here we have an example of Bitcoin. Now, if we ignore everything, try to draw on this, if we ignore everything on the right side of the screen and we just focus on everything from late 2017 and on, what we're going to see is that Bitcoin had not a lot of volume, as you can see from down here, and prices were slowly increasing. But this was before all of the hype. This was before people even knew about Bitcoin, before it was all over the news, before it became a much traded, tool for retail traders. So the goal, if you want for long term, is to get in, before everybody else does. Then all of a sudden, Bitcoin became a thing, cryptocurrency, blockchain, different merchant services accepting it. It was all over the news. Bitcoin stocks were, surging, and you could see the increase in volume down here. And this had to do with a lot of retail traders and interest of greedy traders that did not get in on the early move, buying at the market highs, buying at the top, buying at the top, buying at the top. At one point in, I think it was the start of January 2018, this literally was all over the news. It was buy Bitcoin. You won't regret it. It's going to make you a millionaire. This is when everybody started finding out that how many Bitcoin millionaires there were. They don't realize that the Bitcoin millionaires got in when nobody knew about Bitcoin. So everybody's buying this. I had family, I had friends, I just got in Bitcoin. I got in at 18,000. Bitcoin hit a little above 20,000 and this thing absolutely bursted. So if everybody is optimistic about a stock, about a market, rallying, then obviously that bubble is going to burst. The more buyers you have in the market, the less buyers eventually they're going to be. And you have people being very greedy, thinking this thing is going to skyrocket, to 100,000, to 200,000. And eventually these buyers are going to get caught and the bubble is going to burst, and everybody's greed, everybody's optimism is just going to completely shoot down, below, and everybody's going to panic, and it's going to cause a huge burst in the bubble. So when you hear people on the news, you hear people in the community saying, oh, buy this, buy this, buy this. For me, for my edge, for my trading strategy is to not follow them. Try to see where they're going to be in the most pain, where these longs are going to be hurtful, where are they going to be underwater, and try to profit from their emotions, try to profit from their greed and their complete optimism. Same thing with the dot-com bubble in 2000s when technology stocks, people thought technology is going to be the next biggest thing. It's the same thing. You saw it all over the news. Technology stocks booming. The next bull market, we're going to continue going higher. The market's going to rip. Technology is going to take over. Shortly after 2000, the market absolutely tanked. The bubble bursted because you had so many people, so many retail traders investing in this, going long term, that eventually there was so much optimism that it just bursted because of euphoria and so many people hopping in on the long side. So compare this chart to Bitcoin. Think of this back in 2015, 2014, 2013. When the smart money gets involved, it's stealthy. There's no news of Bitcoin. Hardly any people know about it. And then you have some attention to it. Institutions get involved. The market starts coming up. Volume starts increasing a little bit. And then what you have is called the mania phase. This is when you are going to see everybody talking about it. It's going to be all over the news. You're going to see it all over the trading community, on Twitter, on Instagram, on different Discord servers. When it's in the mania phase and you see everybody saying, buy it here, buy it here, buy it here, everybody's enthusiastic about it. It's all over the public. People become delusional. People become euphoric. It's the next biggest thing. Most likely that is going to be the top of the market. Then the market's going to come down and you're going to have these longs, super confused. They thought it was the next big thing. They are going to, lose a little confidence. They're now losing on a trade. It's going to come back up. They're going to get their confidence back. And then boom, all of a sudden, they're holding on to a losing trade, they're bag holding, and because they were so optimistic, this bubble, blew off, it popped as time goes on. Same thing with down markets. When everybody is optimistic about a bear market, when they think the world's going to end, it's going to continue to come down, that is when the best opportunities are going to arrive. Think about, back in 2008, 2009, 2010, when the housing market crashed. Think about how many cheap houses you could have got, and compare those prices to current market prices when we're at all-time highs. The housing market, we're at historic lows for mortgage rates, when it's so easy to get a mortgage. Think about how much money people made when people are panicking, when people are selling, when people are fearful. So this is a chart of the S&P 500. This right here is the end of February, before COVID was a thing. Down here, where I'm highlighting, is when COVID in the early March, end of February, when it started coming on the news. It was not a huge deal, but there was cases, there was people dying, unfortunately, of COVID. And then the further we get down in March was more of when the news made it a complete mayhem. They made it a disaster. They thought the world was going to end. It's a global pandemic. And then down here, where I'm highlighting right now, is when the news started portraying it as a bear market, the start of a new bubble bursting, the start of the prices coming down. And then down here at the lows, you had people selling their 401ks. They saw how, down in profit they were. They were panicking. They were selling. In reality, like I mentioned, these are the best opportunities to get the market on discount. When everybody is, you could call it pessimistic, but I'm going to call it optimistic of a bear market because of COVID, the world's ending. Those are your best opportunities to get the best discounts, whether it be real estate, whether it be the stocks. In this case, when everybody's a bear, I have to try to be a bull. And when everybody's a bull, I have to try and be a bear. I do not follow the crowd. I try not to follow the herd. It's just my edge and it's part of my style and how I like to trade.